Good morning, friends and traders. Thank you, Eddie. Good morning, Mr. Hoagland. You are right. We came out of the door, came out of the gate swinging this morning. We are in a gold trade opening range. Gold trade. We looked at the 1 minute opening range, 57 ticks wide on that 1 minute opening range. We triggered a long signal. House count is currently long 5 micro gold, 32, 35, 80. With that deep opening range today, we scaled down to micros, and we're still taking about $350 worth of risk on this trade. We have our CYA setup stop, our CYA set at 32.2880. And again, we're working the long side. Overnight inventory short, lots of movement overnight. Gold gapped down, equities gapped up. So we are sort of trading counter to the overnight trend right now. But that isn't always necessarily a bad thing, right? We could be correcting this overnight inventory. Hogue, how do you feel about being long gold right now?
I don't hate it, JD. I mean, we do have the gap. Overnight inventory is pretty short, and we've got negative delta already here this morning, and there were a couple of pretty decent sized buy ice orders, 32, 33, 80. Pretty decent buy order there, but buying about 164 of 194 on the bid. Another iceberg order up near the high, 32, 37, 90. About half the orders were traded on the bid. So we are seeing some evidence of some longer time frame buyers coming in to buy this thing. So we know the risk. We take the trade every morning. It, Gold hasn't been all that fortuitous for us lately, but just seeing the negative delta and some of the buy iceberg orders that we're seeing here, I don't hate it, and ready to take the risk on this one.
Excellent. And again, we did trim our risk in half. We went down to 5 micros instead of a mini just because of the wide opening range. All right, not much happening on the economic front for this morning. Eddie, what's happening later on today and for the rest of the week on the eco calendar, if you please?
Well, I've done it for the rest of the week, but today we don't have anything until 10:30 Central Time. So we've got clear sailing all the way until then. That's going to be a 3-month, 6-month bill auction. We also do have our WASDE report. So if you are trading those grades and so forth, be aware of that. That's going to be 11 o'clock Central. We do have a Fed balance budget for April at 1 o'clock, and that's going to be about it for today. Back to you, JD.
Awesome. Thank you, Eddie. Yeah, slow day today, but we've got CPI, PPI later in the week. We got Jerome Powell taking the podium on Thursday at about 7:40 a.m. Central Time. So while we're here for the opening call, we've got Fed Chair Jerome Powell speaking. We'll see what we can do to pipe that in. Not quite sure it's possible yet, but the closer we get to it, the more information we'll have about that.
Hey, JD, I'm just seeing this right now here. 9:25. We got Kugler going to be
Uh,
speaking here today. So we'll see what the Cougs got to say. And
Thank you.
definitely watching the wire.
Long list of talking feds this week. There's a half a dozen of them scheduled to speak. Probably another half a dozen that are just going to pop in and start speaking. And then again, Fed Chair Jerome Powell on Thursday morning. So
Mm.
that will be interesting. A lot of news out over the weekend too. We'll get to that in just a minute.
yes, yes, lots.
What a what a start to the week. Gap opens in equities. Gap down in gold. Oil gapped open
Uh-huh.
higher.
Gaps a
Uh,
go go.
Gaps a go go. Everything's gap. Send us your gaps. Uh, no follow through to the upside in this gold trade just yet. Looking at
Nope.
volume, petered out. We're at our midpoint of the opening range right now.
Yeah, delta negative 285.
Nothing too heavy.
Nope. Nope.
We had a great week for
Um.
the opening range trade last week. Cleared about
Yeah.
roughly $1,500 trading one lots on 10 opening range trades. Most of them losers. Still ended up
Positive.
fairly decent profit.
Mm-hmm. Earnings this week, nothing huge. We get Cisco on Wednesday, Walmart and Alibaba on Thursday. John Deere and Company also on Thursday, but nothing real big or impactful this week as far as earnings are concerned. Next week, a lot of retail, Home Depot, Lowe's, Target, all kinds of retail next week. And then the week after that, the one that everybody's waiting for, NVIDIA, on the 28th of May.
That will be a big one. What happened overnight? Stocks in Asia closed mostly higher. Shanghai Composite up 0.82%. The Nikkei up 0.38%. The Hang Seng up 2.9%, almost 3% in the Hang Seng overnight. Markets in Europe currently trading higher this morning. FTSE up 0.61%. The DAX up 0.66%. And the CAC up 1.43%. We'll go over these later, but I've got the US dollar index at 101.67. VIX currently below 20, 1983, down close to 10% today.
Mm-hmm.
And the yield on the 10-year Treasury note, 4.457%, up about 0.1%. Still no love in this gold trade. I'm still looking at a 1 minute. What does a 3 minute look like? Could be bull flagging, possibly.
I'm hoping that we're getting a whole bunch of short time frame traders short here, and we'll see them continue to get squeezed, possibly.
Looking to hang on to that overnight momentum right on the open. A lot of shorts piling in overnight.
4 out of 5 opening range trades were successful in crude last week. 4 out of 5. Not bad.
Not bad at all. Did we have a winner in gold? Do we have one winner?
I don't know if we did.
I'll have to go back and double check. Normally I spend some time on the weekend going over those. I did not do that this weekend though.
Yeah, last week was a rough weekend in the gold opening range trade, but a great week for crude, and another positive week for the opening range trade.
Let's say conservatively we were 50-50.
Order filled
yesterday. 10 trades, 5 winners, 5 losers, and we made $1,500. I'd say that's pretty good.
Not bad for a very mechanical, low probability trade, but yep.
Managed it well. We got out of that crude oil trade
Friday
rather brilliantly on Friday. Called it, failed downside auction.
Yep.
And we covered that trade 10 ticks above the low of the day. Held as the low of the day.
I know. I was hoping we could cover it on the dead low. But hey, if you do that, it's luck. If you do that, it's just luck.
It was pretty close. Gold is not cooperating this morning.
No, not yet.
I almost just want to cut this and see if we can get back in better trade location. But that would be lennying it, wouldn't it?
Yeah. I mean, it's still valid. Negative 230. Order filled now. Delta.
So got some more shorts piling in. Delta. Negative delta means there are more market order sells than market order buys coming into the market.
Yeah, that 3-minute bar does look like a little bull flag there, doesn't it? And on the 3-minute chart, we've got ADX green increasing. I don't think we're dead in this yet. We're not dead until we're dead.
Yep.
As JD calls it, toast.
Toast. Not a loser till you get out, guys. Don't quote me on that.
This is not financial advice.
Well, we're 67% long here in gold, 50% in the money. Average price here on the longs, 32.41.31.
Thank you, Eddie. Still waiting, watching. Halfway through that opening range, 1 minute opening range bar. Again, almost 60 tick wide opening range bar in gold this morning.
That's a biggie.
And a high 32. Yeah. I actually mark these down. High of 32.35.70. And what was our low? Low was 32.30 even. 57 tick opening range.
we
5
did
at
see
32.3580.
we did see
What's up,
gold
Eddie?
falling 3% after these agreements between the U.S. and China. So that's part of what we're seeing here. It's sort of a playoff on that right now.
Mm-hmm. Little follow through. We have been stair stepping higher since we put those overnight lows in.
Yes, we have.
Seems like some of that overnight inventory wants to start balancing out. Love to see
The
that follow
EDX is
through happening
favorable
right
to the
now.
long side right now, so
Yep.
not convinced
I
this
know
is
we're
gonna
on the yeah, I've got that feeling too that we're on the right side of the market, but the opening range timing might have just been a little off. Well, we'll
at
see what
least
happens here.
initially. At least initially, I think it is contrary to the bigger picture. You know, we had that big reversal pattern, the island top last week.
Yep.
It's been coming off pretty hard, but if this overnight inventory starts to get nervous, this could be a decent 2-to-1 see money take money because it is contrary to the bigger picture.
Yep.
Ish. We'll see this all in the charts when we're going to talk about this in a little bit.
Yep. Ogle mentioned that island top formation again in gold. Very, very powerful reversal signal in gold last week. All right, we got 26 minutes until the crude oil opening range trade. Top of the hour, 8 o'clock a.m. Central Time. Opening bell for crude oil. We'll be looking at the 1 minute opening range trade there also. Until then, Eddie, what happened overnight? I know there's some big news.
Well, yes, we had a
What
weekend
was the
of
news?
overnights here. U.S.
Weekend.
stock futures, we did see these climbing today on the announcement that the U.S. and China has agreed to substantially lower the sweeping tariffs on each other. We did see the Dow contract add 1.9%, S&P up 2.5, and the Nasdaq increased 3.4. While the main averages on Wall Street were relatively subdued this past Friday. That was ahead of the meeting in Switzerland between the U.S. officials and China. The indices ended marginally lower for the week. U.S. and China have agreed to a 90-day pause to soaring tariffs and placed on each other. Washington has moved to slash tariffs on China to 30%, and Beijing duties on U.S. imports are being cut to 10%, the nation said in a rare joint statement following the high-stake talk over the weekend. While heading into negotiations, Trump had raised tariffs on China to 145 in Beijing, hitting the American imports of 125. 145 versus 125. Consensus from both delegations is that neither side wanted to decouple the situation. Heading into the economic calendar, as mentioned here, we do have some fresh monthly readings. Consumer price in the U.S., which could shed some light on the impact of the recent trade tensions. Department of Labor Consumer Price Index for April, they're looking at a possible 2.4%, matching March's level. Many economists have warned that Trump's tariff policies could refuel inflationary pressures in the U.S., while the recent consumer surveys have indicated that households are bracing for greater price gains in the months ahead. Elsewhere, we did have the U.S. dollar gaining and the Chinese yuan strengthening. Gold prices dropped, potentially signaling that the progress in the trade talks had taken some of the attraction off the traditional safe haven asset, which we call gold. That's what I've got here right now, JD. And we'll do some crude. I got some crude for us, but back to you, sir.
Thank you, Eddie. For those who subscribe to our weekly kickoff email, we had some good commentary in there about some risks still present in the market. There's quite a few large institutional investors out there who are thinking that we could still see another leg down in equities after these trade talks have subsided. Hart at JP Morgan, Tudor Jones all foresee a future weakness in equities post tariff deals. Are we leading the sheep back to the slaughter here, guys? Well, we could go over our opinions on that in a few minutes, but again, we got 24 minutes till the top of the hour, 8 o'clock a.m. Central Time, crude oil opening range trade. Until then, Professor Hoagland, dazzle us with your chart knowledge, please.
I will do my best. I will do my best. Thanks for everybody that joined me for the weekly kickoff last night. I enjoyed spending some time with everybody on a Sunday night. Hope everybody had a wonderful Mother's Day and all of that. This is the week, the monthly chart. I like to start and end the week with the monthly chart. A lot of excess on that. Okay, last month's excess is continuing to see buying pressure as some of these tariffs seem to be kind of playing out a little bit. I mean, I don't think we have anything in writing or in stone yet, but at least there's some good news. And we all know how much these markets love good news on the weekly. We're one time framing higher off that low. We got higher highs, one lower low, but after that, we're still one time framing higher. We've got the market opening last night at the weekly kickoff high, 57.50. Kind of a balanced to break even situation we've got going here. Unfortunately, it did happen in the overnight session. If you were trading overnight and you were able to profit from it, wonderful. But we had this area of balance that we were talking about all last week. Most of last week was inside the previous Friday's range. So very range bound, very waiting for new information. Well, guess what? It got
Order filled.
On over the weekend. On Friday, inside day, low volume, losing 2,200 in open interest, nothing impactful. Now we've got new business, and this market is continuing to push to the upside. How good of a job is it doing is still in question. So here's Friday's range. Here's the weekend gap. Weekly kickoff high 57.50. Market opened above it, looked below, wrestled with it for a while, but has since left it. We see the London Open. Wow, what a big push on the London Open. The market is continuing to try and push higher. We have a lot of overnight inventory to the long side. That's all overnight weaker hands longs. Maybe not all of it. Look at the volume on that 2:00 bar when that thing popped. This is an area, folks, that we were talking about last week. I've been talking about this area for a couple of weeks where we may see some of the longer time frame participations, or as we call them, the adults in the room, start to feel a little bit squeezed, like they're missing out on some of this move. I'm going to be monitoring today to see if we see continuation of sneaky buyers. We'll watch Delta. If we see a Delta divergence, that can be one indication of it. And yes, monitoring for continuation is something that it's difficult. It takes a lot of experience. It takes a lot of time to understand what that means. So in your way, maybe it's something in the charts. Maybe it's, just the way the market is moving. We see volume continuing to come in, momentum, participation in the upward direction. That may indicate that we're seeing new buying coming into this market. We have not seen any big new buying in a little while. So this is one of those situations where I'll be looking for the longer time frame participants to possibly be forced to enter the market. Again, we've got good news. We don't have anything set in stone. It's going to be kind of tough, to kind of be able to trust that. So the article in the weekly kickoff that JD mentioned is worth a read. There's always two sides to every story. There are some economists that are saying, hey, this is all good, we're going higher. There's some that are saying we still have a lot of risk on the table. It's all in what you think and what you're seeing in the markets, and using market generated information is the thing that will really help you limit risk. So overnight inventory long, gap to the upside, weekend gap. There are plenty of visual targets above in the S&Ps in the form of naked points of control: 6607, 072, 092, 153, 206, all visual targets above. There are, of course, visual targets below as well. Whichever one is being focused on by traders is the one that's going to matter. My question is, where do we buy this thing? Got to find good trade locations. You got to find ways to limit risk on that. The profile on Friday was a long liquidation B shape. that's long liquidation. That temporarily takes selling power away from the market. If you're long and you get out, you have to sell to get out of longs. You're taking some of that selling power away from the marketplace. We did kind of a pretty decent job of repairing Thursday's profile on Friday. Now we're flat out above all of it, so it's going to be a interesting, challenging, and hopefully profitable trading day for everyone. Again, I'm watching for longer time frame participation to the upside in the S&Ps and in the Nasdaq. This is the monthly chart for the Nasdaq. Again, deep excess on the monthly chart. I don't know how far we'd have to go back to find this kind of excess on a monthly chart. That's a good thing, right? Weekly kickoff. All right, or weekly chart. One time framing higher off of that excess low, and it looks like we are continuing to try and push to the upside. How good of a job is it doing is always going to be the question. The market has been attempting to move higher. We did see, lots of naysayers as the market kind of slowed up near this upper area of this balance. Now let's take a look at the daily because we're going to see more what we're looking at. A lot of naysayers coming in when we kind of fell into this area of balance, but this area of balance did a pretty good job of evening inventory and getting the market ready for its next move, whether it was lower or whether it was higher. It would appear that the market is looking higher. How good is it doing in getting there? Well, the last 3 sessions, including Friday, the last 4 sessions, including Friday, we added open interest in the Nasdaq. Not so much in the S&Ps, but yes, in the Nasdaq. 1, 2, 3, 4 days of additional open interest. Fridays was very small, almost inert, if you will, adding 200 in open interest on Friday on a low volume. The market just needed a rest. So now, again, we've got a gap to the upside. We've got plenty of visual targets well above the market. Weekly kickoff high 20,400. Well, relatively close to putting in the overnight low here. We went down to 397, 376, so about 25 points through it, rejecting price below it, rejecting the gap, continuing to push to the upside. The big jump at 2 a.m. Central Time on decent volume. Overnight inventory is long. Yeah, there it is. So we've got a lot of weaker hands longs in this market. If they don't get what they're looking for, they may start to liquidate some of those longs, which would give us better trade location for longs in a bit, maybe a little bit longer time frame. We're going to have to see how this market opens up. If it leaves the opening range at one extreme or the other, looks like we're out of gold. It looks like, right, JD?
We are, Hogue. I didn't want to interrupt you. We got tagged on the downside. It looks like we were liquidity. As soon as it came down, it ran some stops below the opening range. Popped right back up to the high of the opening range. So that's where
Rats.
we sit now.
Okay.
Keep
All right.
looking at
Well,
this.
we'll take a look.
I'm
Take a
not.
look at
I'm
gold
not
in a
averse
minute
to
here.
just. Yeah, I'm not averse to just
Getting back
jumping right back in this trade. Yeah, I still kind of like it
well,
to the long side, but we'll talk about it when you get to gold.
okay. Thank you, JD. So I think we're kind of done here with Nasdaq, except for Friday's profile. Again, was a B-shaped long liquidation, not really supported by a loss in open interest, but just a kind of a rotational resting day on Friday. It makes sense to me that the market is now seeking new levels to facilitate trade. Weekly chart in crude oil. All right, excess low, another excess low, range bound. It's in rollover. This move to the upside could severely
Let's see what happens
complicate the
here.
rollover for our longer time frame traders. It's still
10:45,
somewhat
nothing.
range bound. We're looking at range bound to break out rules on the weekly chart. Take a look at the daily. All right, so here's the upper end of that range. We've got the weekly kickoff at 61.90, which was where it was for the past week or two, and we're breaking out above it. We're also breaking out above this trend line that goes way back to March of 23. 1, 2 points of contact. Not a very strong trend line, just more of a reference to how this long time frame area of balance was kind of closing in on itself. Balance is narrow. We broke out below it. That was the push to the downside. Messed around right on top of it just after last month's roll. Now we're back in roll. We're back in this area of balance. Moving above weekly kickoff high might be enough to entice longer time frame traders to adjust inventories outright while they're working on getting a cheap rollover. This would be a challenging rollover, I think, for any of the longer time frame crude oil uh, hedgers. Let's take a look at the 30 now. All right, so move was to the upside pretty much all of last week, 1, 2, 3 days. Opening with a gap above Friday's session high. Last week's high, 61.45. Weekly kickoff high, 61.90. Boy, when these markets really want to go, they just go through and everything. There isn't an indicator or a level or a line that is going to stop it when it really wants to go. What the heck is this doing here? How did that get up there? Move to existing pane below. There we go. All right. So overnight inventory. Yeah, it's pretty long. Yeah. Overnight inventory long. We have a previous gap that we have dove into. We've dove into this gap. We haven't finished it. We haven't completed that gap. So it remains. And you can see how the bottom edge of that gap, for the time being, looks a little resistant to price. We're going to see how this price is treated after the open. But again, opening range trade is likely, maybe a little bit higher probability because we are opening with a range, with a gap above the range against a previous gap. And again, lots more weaknesses in structure above than below, although there is weakness in structure below. We start getting pretty cheap down here. So we're going to watch this opening range trade. We're going to take that bad boy and see if we can go 5 for 5 on the opening range trade in crude oil. We added 2,000 in open interest on Friday. Very narrow, just kind of range bound day. The market did look lower. I would say that the open interest that we did add, again, approximately 2,000 contracts, was to the long side. After we put in this low here, the grind was really kind of pushing to the upside. I feel like that was really new longs coming into this market, and they are most certainly getting paid. If you're looking at regular extended trading hours, the weekend gap was closed all the way to settlement being 61.02. So do we have this gap here or not? There was a small previous gap that occurred between two regular trading hour sessions that remains unchecked in regular trading hours. It filled last night, but I tend to look for those to get filled in regular trading hour sessions. And we are just really holding right at the top here. It's going to be an interesting day. Aren't they always? All right, now let's take a quick look at monthly. Starting with the monthly, no major change in market structure on the monthly chart. We got an inside month setting up here. Weekly chart, range bound. 1, 2, 3, 4. This is the 5th week in range, in balance.
Order filled.
3180 is really kind of the weekly kickoff low, of course, but I think that's a level that will garner a lot of attention from longer time frame traders. We're about $41 above that. I think that if we get to that level, it's going to be an important level to be paying attention. Not suggesting any execution in either direction there. I just going to be watching that level to see what happens at that level. So let's take a look at the daily. Okay, again, 3180, pivotal level, range bound for the last 3-4 weeks. An inside month setting up. We'll see if that plays out. We're seeing some recovery from buyers on Friday on low volume. We added 1,700 approximate new contracts and open interest. It's pretty much right in the middle of the weekly kickoff levels here, uh, and on Friday. But again, we're starting to get near the lower end of balance. So I'm kind of viewing this as balance to breakout. Rules apply. If there is a failed attempt to break down below 50 31.80, if we get down there and it rejects, the move would be to the upper end of balance, which would take us to weekly kickoff high 34.36. If we get below 31.80 and we start seeing volume coming in,
Order
participation,
filled.
momentum, tempo, all of those things that we talk about and looking for continuation, or anything in continuation moves, then we have to go with it. So it's, any failed breakout you fade, any successful breakout you go with. So much of what's going on in gold depends on what's going on in the equities right now. So take a look at the 30. All right. So we had an opening range trade. We got knocked out on it. Maybe we became a little bit of liquidity. And that seems to be the story in the opening range trade in gold. When we're talking about the opening range trade, when we're looking at the first minute, we're just putting in a stop above to get long, a stop below to get short, and we're letting it play out. There are times when a market is not going to be very gratuitous with the opening range trade, and there are times when it's going to be very gratuitous for the opening range trade. Case in point, I think we're 0 for 6, 0 for 5, maybe 1 for 5 in the gold trade, including last week and this morning. The crude trade has been 4 for 5, and sometimes it streaks that way. A lot of traders trade the opening range trade, whether it's a 1 minute, a 2 minute, 3 minute, whatever it is. But the predatory algos and the algos sense that order flow. They know where those stops are going to be. So very often, unless it's a really directional move right off the open, they'll come back and take that liquidity, which is probably just what happened to us in gold, right? Just now. So the opening range trade, it's a low probability until it isn't. You're going to see, I can see streaks where, there's 8 out of 10 days the opening range remains either the high or the low of the regular trading hour session. Those are fantastic opportunities. And again, because you know your risk and the potential for profit is what makes them so attractive to me, and I think attractive to JD as well. So what are we looking for as overnight inventory? Short. Okay. We got the weekend gap. We got a session gap. We got lots of gaps. There's still a lot of weakness in structure down below this market that can be targeted. So I'm not ready to jump in and start looking for longer term buys here. After the 2 day island top up here, that's a reversal pattern. A lot of folks were saying that this was a blow off top here. Very well, very well could have been. Looks like it now, doesn't it? The 2 day island top is the nuance that says to me that there's a change coming in this market. It has been pushing to the downside more in a range than anything trending. But if we start taking and seeing some price action below 31.80, that weekly 31.80, that weekly kickoff low, that could change things considerably technically. So, all right. That is what we're looking at as far as these charts are concerned. Hopefully, that's going to help put some sort of context over these markets. And always remember risk management and staying patient in your trading. We are getting ready here for the opening range trade in crude. Eddie, what you got as far as news on crude?
Earl, baby. Earl, Texas tea, black gold, liquid dinosaur.
Order
Oil
filled.
prices did rise today, building on last week's sharp gains as the announcement of the China-U.S. trade deal raised hopes that the world's two largest crude users may be moving forward to a resolution. We did see that Brent climb 2.5%, WTI a little higher at 2.6. Both of these contracts rose by more than 4% last week on optimism over the potential de-escalation in the Trump's tariff agenda. That's what I've got here. And we've got just about 3 minutes here before crude does open up. Back to you, Hogue.
Thank you, Eddie. Thank you. All
Thank
right,
you,
here
Eddie.
we go.
Yeah, Hogue, you nailed it. You nailed it on those opening range trades. Last week, 3 out of 5 days, the 1 minute opening range held as the high or the low in crude oil. We got some nice rippers out of those. Thursday, we held on to a crude oil trade on Thursday for just over 4 hours, took 90 ticks out of it, almost a full dollar out of a crude oil trade on the opening range. Not saying that's going to happen again today, but when it runs well.
Yeah, it's been streaky to the good side, so we'll definitely have to take it today.
Mm-hmm. Got about 2 minutes until crude oil opens. Top of the hour, 8 o'clock a.m. Central Time. Opening bell for crude oil.
Sean, good question. Will the adults enter the room now?
Ooh.
Yes, Charles. Yeah, it's an island top, but not a lower top. But you know, the market did come up to it, fail against the previous high, leaving a island top. Yikes.
What a move overnight in crude. What are you
Yeah.
giggling about, Hogue?
Robert Cooney, our Robert, the Riz, is answering Sean Mastro's "Will the adults enter the room now?" He just waved at him. He's, I guess he's an adult.
Good morning. Good morning.
Good David.
All right, we got our 1 minute chart back up here. We got 1 minute till the opening bell. 1 minute. 1 minute.
Well, it wouldn't have been a bad idea to get back into that long in gold, would it?
You know, gold right now, 80% long. It got up to 83%, Johnny, when you were doing your charts.
Wow.
Right now, 72% in the money, 32, 38, 20, 34 average price here in our tilt long side.
Thank you. Shady Shad wants to know how do we get all those numbers on both sides in the dome? That's level 2 data. Look it up, Jotty. Level 2 data will get you 100 prices on either side of the market. A little bit of movement right before the bell in crude here. Just a bit.
Little wiggle.
Little wiggle. There we go. Crude is open for business. Looking at the 1 minute range. Got a 1 lot loaded.
Gold rip into the upside now.
I know, right? I wanted, as soon as it tagged us out, I wanted to get back in so bad.
All those shorts.
24 tick wide, opening range too far in crude.
Still negative delta in gold also. All right.
Got a high of 37, low of 23. Mid range right now. I'm going to enter our stop.
14 ticks. And it is established now.
We're working our stops to enter above and below the market right now. And we just got tagged. No slippage. Long one crude oil, 63.38. 63.38
What
long
was
one
the
crude
P&L
oil
on the
contract.
gold trade, DD?
Minus 372.
Thank you. Ah, just got tagged on 1 tick above the opening range.
Yep, 1 tick above. Top ticked it. Give it a little extra room on the downside.
It's pretty
CYA
small opening range.
63.18. Yeah, 63.18.
That was pretty
There's
quick to
CYA.
bust out the opening range for crude oil. It's been hanging in
Real
there for a
fast.
few days, for a few minutes.